Hello Lana, welcome to Manifested e-learning forum. My name is Emlyn Ngwiri and I'll be taking you through alternative investment analysis. We are looking at block revision and we will look at September 2015, which is the pilot paper, question 1. Question 1A reads as follows. Consider the following asset-backed security structure. So we have that diagram there, or that table there. We can see the senior tranche has got 200 million structure. Subordinate tranche A has got 150 million par value. Subordinate tranche B has got 70 million par value. The total of that tranche is 420 million. We are told that if the assets in the pool are worth 450 million, what is the amount of collateralization and at what amount of losses will the senior tranche investors begin to lose money? So September 2015, which is what you're saying, the pilot paper, question 1. So that's what we are looking at, part A. So the table shows us senior tranche, which you're saying is 200 million. Then we have the subordinate tranche. Par value is 150. There. Then we have subordinate tranche B. This is A. That. B. We're saying we have this is 70. That. Then the total. We have 420. So we are being told that the assets in the pool are worth 450 million, meaning that the amount of overcollateralization, so overcollateralization is now the difference between the assets in the pool and this total value of the tranche. So it's 450 million. 450 million minus 420, that, then we are saying we have 30. That is the amount of overcollateralization, meaning that these are the value. This is the value of the assets that have been floated to the market based on the securitization transaction, and this is the assets in the pool or the tranche that has actually been produced from these assets right over here. So the amount of overcollateralization is 30 million right there. The second part of the question is asking at what amount of losses will the senior tranche begin to lose money? The amount of losses that this senior tranche will begin to lose money, meaning we have to start from saying a statement like this, that losses between 30 million and 100 million. How do we get 100 million? We get 70 plus 30 will be absorbed by the subordinate tranche B. So we're saying that the amount of losses that the senior tranche will begin to start making losses. Then the amount of losses that the senior tranche will begin will be able to absorb. To absorb is computed as follows. We are saying losses between 30 million and 100 million. can put it over here like that. You can squeeze it there. How do we get the 100 million? 30 million plus 70 million. That's how we're saying this is the amount of over collateralization there. So from 30 million plus 70, we get 100 million will be absorbed. Will be absorbed by the subordinate tranche B. Subordinate tranche B. Put a full stop there. A new line, we can say losses between. Now we are saying the previous value 100 million, and now we get this 100 million plus the 150 million, we say 250 million, 250 million will be absorbed by subordinate tranche A. Tranche A. Now, to answer the question, now we are going to the point where the senior tranche will begin to absorb losses. We are saying that losses between, now we say 250 million, pardon me, put this 250, and we say 250 plus 200 million, we are saying we have 450, and 450 will be absorbed by the senior tranche. Absorbed by the senior tranche. That answers part A of question 1.